Our money should be a natural expression of ourselves. And I believe that your dollars, if you're truly conscious, they probably aren't indexed. I mean, if you really are serious about peeling back another layer and being conscious with your investing, I believe that you should be expressed in a way that any stock or fund you know well, and you believe as it flourishes over the next 10 years, the world will be a better place. And you will, by the way, do mathematically better with your investing if you're invested that way than if you're just giving it over to your money guy or saying, I don't even know, we're just indexing everything, I'll just buy everything, which, by the way, means you just bought all the bad companies and all the mediocre also rans when you could have just gone for the first rate, not settled for the 10th rate.
Hello, everyone, and welcome to this week's episode of The Conscious Capitalists with myself, Timothy Henry, and my partner making the world a better place through business, Raj Sisodia. Hey there, Raj.
Hey, Timothy. Good to see you again after our experience in the heartland. I hope I don't know if Nebraska is the heart, what does that make Washington?
I don't even want to think about that. Certainly not the brains, that's for sure. Maybe it's the foot. I don't know.
Okay.
That'll get me in hot water. Today is a special day for us because we have a longtime acquaintance of ours and friend, David Gardner, joining us. David was the chief rule breaker at the Motley Fool, a financial services company that he co-founded in 1993 along with his brother, Tom. He also serves nowadays as the chairman of the Motley Fool Foundation, if I've got that right. He's on a number of different boards, very involved in the culture world around DC, in the Folger Shakespeare Library, where he's been, and he sat on the advisory committee for the New York Stock Exchange for some 15 years. And I don't want to underplay this idea about the Motley Fool and being really foolish, because they have foolishly, over a 20-year period from March 2002 to May 2021, they've foolishly outperformed the S&P average, which was about 9%. They came in at something like 20.6%. So they've sort of done pretty well in terms of their investments and real good advice on how to think about investing, and really about investing not only in stock, but in life. David Gardner, foolishly happy to have you here. Welcome.
This is such a delight, Timothy and Raj, to spend this time with friends, older friends, not in terms of age, but just in terms of association. We've been together and around each other's lives for 15 years, and this is my first time to really have this kind of a conversation with you both, and I'm excited.
Oh, love it. Love it. David, you're one of my favorite people in terms of both being a rational optimist, but living it in terms of how you show up every day. And on that note, I just maybe want to begin with maybe that. Talk to me a little bit about what it means for you to be a rational optimist in life.
Well, there's a great book, first of all, called The Rational Optimist by Matt Ridley. And I love that book. I completely recommend that book to anybody who hasn't read it. And there are many things to pull away from his survey of all of humanity and our history. But the primary takeaway, I think, is that in almost every generation recorded, there were many people who thought apocalyptically, this is probably going to be it. It's all going down. My kids will not enjoy the same standard of living that I have. Look at all the things that are clearly wrong with the world. And they're pessimists. And I think that, therefore, the rational choice is to realize the ridiculous amounts, beautiful amounts of human flourishing and progress that you both have been so eloquent speaking toward and helping us toward in your own work and lives, and many others besides in this wonderful movement that you all are part of, co-founders of. And I think that is reason always to be optimistic. And it's sad and ironic, but I believe it's contrarian. It's a contrarian position to take a position of optimism, which, by the way, is not just a state of mind. I think optimism is a creative force. So whether you think you can or whether you think you cannot, Henry Ford was reputed to have said, you're right. So I feel very strongly about that, and that's helped me with all my investing.
Well, then pivot over to that. How did being an optimist help you with your investments?
Well, I think, first of all, you realize that if you have the blessing of living decades on this planet, which I hope all of us do, you should be playing the long game. And there's a reason that anytime you look at a graph of the stock market's history over any meaningful period of time, 20 years or 100 years, you see it goes from the lower left to the upper right. And that is not chance. That is not random. It is also not short term. In the short term, we really don't know what the market's ever going to do. But if you're playing the whole life game and you're buying into one of the great innovative cultures in world history, the United States stock market, you are getting to participate as an owner in an ownership culture of something that will compound the gains and the goodness for you over your whole life. And therefore, I think as an optimist, it helps ground me and remind me that 2 years out of every 3, the stock market rises. And 1 year out of every 3, the stock market falls.
That's a poetic introduction, and I love the way you express yourself. It just occurred to me that your name is very appropriate, Gardner. There's a gardening philosophy, and there's a hunting philosophy, right? You just find your targets and shoot them down and take them out. Or you nurture and you cultivate and you weed and you have that courageous patience, which is important in any aspect of life, and certainly in investing. I think it might have been you guys who said that short-term investing is an oxymoron, right? That investing by definition is something that is a long-term act. So, but again, going back to your philosophy with Motley Fool, where you describe yourself as a rule breaker your whole life, right? And so in investing, but also in leadership and how you think about value. So where did that come from? Where did that tendency to try to break the rules rather than follow them? Were you just wired that way? Were you one of those kids? Or was that a lesson you learned?
I think that I did tend to be, Raj, and I may not be the only one in this conversation who is this way. If everybody starts going one way, I start thinking, but I want to put in a word for the other side here. And I think that is just always how I was. I think that there are 2 things that were in me in my youth, and that was certainly one of them. I would start playing devil's advocate if nobody else would play the devil and advocate. And so that was the first thing. The second thing is that I've always been optimistic and cheerful. I went to summer camp, sleepaway camp in the state of Maine, and on the Camp Tamanis Hall of Fame plaque that still sits in the dining hall from the year 1976, most cheerful was David Gardner. And so I really do think, of course, there's so much that is behavioral. There's so much is learned experience, lived experience, but we never want to forget there's a huge genetic component to a lot of us.
So, David, I love that approach. And that, of course, leads to your new book, the Rule Breaker Framework, Habits for Long-Term Prosperity. And so you not only have this really cool philosophy, but you've also started to codify it. It's that, not an accident. Here's the things that we think are important or that you think are important that you've lived and experienced. Maybe take us through the framework. And then, we'll encourage people to go get the book because, it's in much more detail there. But give us the flyby. Tell us a little bit about the core of it.
Sure. Thank you, Timothy. So I structured the book as cleanly and logically as I could. There are 3 parts to the book. The middle part, the delightful middle, the fun part of the sandwich is just speaking to the stocks themselves. And that's something that I've done for a long time. In fact, in 1999, my brother Tom and I wrote a book called Rule Breakers, Rule Makers. I got to write the first half, the Rule Breakers part, where I put out 6 traits that I'm looking for in stocks. And spoiler alert, my new book has the exact same 6 right there in the gooey, good, fun middle of the book. And we can certainly talk about those, which I would love to. But I think there's something beautiful that, 27 years after I wrote them as a younger person, positing that this would work and this is what I'm going to do. It's exactly what I have done, and it worked brilliantly. And that includes lots of losing along the way too, which is part of winning, is losing to win, a key theme. But the first third and the third third are brand new, and I'll just speak to those briefly. The first third are the 6 habits of the rule breaker investor, because while I could say, hey, Amazon, or hey, NVIDIA, and I'm happy to say I said both very early on, the truth is that if a Motley Fool member didn't have proper habits, they could buy Amazon or Apple or Netflix, and then they could sell it and just only, for a trade. They could not evince the proper habits to really maximize the benefits of investing. So I realized it's not enough just to say, hey, here's what we look for in stocks. I really wanted to leave the book off with, here's what you need to look for in yourself. And there are a number of those. We can speak to any that you want, but there are a number of those that run, I would say, contrary to what most people expect, because this is, after all, breaking the rules. This is thinking different, along with Steve Jobs creating the most valuable brand in the world. Think different. And so that's the first third of the book. The last third, if we've done your habits and we've done what you look for in stocks, and you think about the implications of those two things and play it forward, you're going to end up with a portfolio. And most people don't have a lot of coaching or understanding or frameworks about how to build a portfolio. The most frequent question I get on my podcast is, how many stocks should I have in my portfolio? And it's a totally understandable question. It's also the wrong question because there's no correct answer to that question. It's more about how you're framing it and what you're managing. And when Raj pointed to my Dickensian name earlier, Gardner, it's very much about cultivating the garden.
I think, David, you do place a great emphasis on the leader, right? The leader, that singular individual with incredible vision and drive and so forth, and not necessarily on a technology or a strategy or whatever else it might be. So talk to us a little more about that. Is there a danger now when that leader moves on? What happens to that company? What are some of the other dimensions around pegging so much of it on a particular individual?
Thank you, Raj. And, I think a lot about that. And you're right. I'm very leader-centric. I think we in the movement, conscious capitalists, value, I don't even like this phrase, and I know you probably don't either, human capital, which sounds so disconnected from human flourishing. Right. But I mean, we really do think that character counts. I always have. I think character always wins, and I'm always going to be playing the long game with the best people, which is why I'm on this podcast, not some other chump podcast, because I love you guys. You guys are awesome, and I like to hang out with the best people that I can in any room or context, and that's what I've tried to teach my adult kids, is make sure you're spending time with the best people that you can find and know. So I do think that it's so important, the leader, and obviously we're all human. We're all faulty creatures. People make mistakes. Reed Hastings introduced Quickster briefly and tanked Netflix stock in 2011. He made a mistake. So you realize that's all part of winning, is losing. But I would say, Raj, that leadership for me is something that emerges not just from single individuals, but if they're doing their job right, and I learned this from you both, they are creating a culture. And conscious culture, one of the 4 foundational elements of conscious capitalism, runs deeper and richer. It's rich soil. Bathe in the loam of goodness if you are at a company or organization, for-profit or not-for-profit, that has a beautiful, rich culture. I've seen it firsthand. And cultures outlive leaders. Leaders come and go. It's hard to change cultures for better or for worse unless you make a very conscious, intentional effort to do so. So generally, Raj, when people are like, well, what about when Steve Jobs is gone? Well, good news. Tim Cook showed up. Tim Cook has actually created more gross dollar value than Steve Jobs did, even though Steve Jobs dying an untimely early death is the one who set everything in motion and is one of the great entrepreneurs of all time. So I would say that, yeah, you can have people who show up who get the culture, and you're more likely to if you have a great culture. So that's a quick thought on leadership.
Well, I think that's actually really, really spot on. And it went exactly where I was going to go, which is the really great leaders and the really good boards that are supporting those leaders look at who is the next generation of leaders and what is the cultural DNA that you're leaving behind. Because too often a charismatic leader comes in and it's their personality and it's about them. But if they don't embed inside the organization a way of doing things and a way of being and showing up, and if it doesn't get into the DNA of the culture, then when the founder's gone, there goes the culture of the founder as well.
It's a beautiful phrase, and it ends Candid by Voltaire, and it's we must cultivate our garden. And Raj used this analogy earlier. Not everybody is spreading seed and is willing to let things grow or take the risk that they might not grow. And that reminds me to say, Raj, that of course it doesn't always work out. A very influential figure for us early on, Howard Schultz from Starbucks, who invested in our company and has exhibited many forms of conscious capitalism before I knew the phrase conscious capitalism. And Howard has had a devil of a time at different points replacing himself as the leader at Starbucks. I think at present, the company is well led, but I watched him go through every best practice including bringing in a leader and having them work alongside everybody for multiple years and all the rest and feel the blessing of the board. And it didn't work out. And it reminds me that my very wise, now deceased father-in-law, who was very successful in business, said, John McKinnon said to me, I don't care how many best practices you follow. My own horse sense, he basically said, is it's always going to be a 50-50 proposition when you swap out that founder for a new leader. And, sometimes charismatic can work okay. And sometimes conscious doesn't actually work because it's not just a litmus test for are you conscious or not. There are many complex factors around cultures and succession, boards, as you well know and spoke to, Timothy, et cetera. So I want to make it very clear. We all come from a place of humility. And I want to say, sometimes I've held stocks where it didn't work out after that founder left. And take our lumps.
Well, I want to come back to something you alluded to earlier, and it's about being an investor, Gardner. And one of the things that I find fascinating is, we keep talking about stock ownership. And, I sometimes wonder if you're a short-term investor, stock ownership is sort of an oxymoron because, what we've been talking about is an ownership mentality, a stewardship mentality. I want the business to thrive over the next 3 to 5 years. And if I was an owner, that's what I would want. But now we have this confusion of, well, I've bought a stock, so I have the legal rights, quote unquote, in some way, shape, or form of being a faux owner. And that seems to be such a fundamental problem right now in terms of how we're thinking about things, because that's not investing, as you said. And I'd love you to play on that a little bit more as to how you got to that point where, it's like, investing isn't investing if you're a day trader at the extreme.
I mean, I love this question, and we could have spent our entire conversation just on this point because I think it runs deep and it's very important and everything's connected. So I guess I would start with the language we're using. And I would say, what does the word invest mean and where does it come from? And the etymology of the word invest, which is very important to me, the word invest comes from the Latin investere, which means to put on the clothes of, to wear the clothes. So we are right now having this conversation in October of 2025, where the National Football League is on fire in terms of its interest and what people are spending their time with on Saturdays and Sundays, college football now being professional as well. And most people are wearing the jersey as they go to the stadium to watch their team on the weekend. They are putting on the clothes, if you're with me, dear listener and gentlemen. They are investing. They're deeply invested in their team in a way that is so true to where that word came from. I believe that word is just as true of our money. I believe that anybody listening, if you've been jumping in, jumping out, trying to avoid the next crash, not sure what you should do exactly, and meantime, you're sticking with your sports team year after year. They might have had a bad year. Doesn't matter. You're keeping that jersey on. It's amazing how we as Americans intuitively get investing, and yet we don't do it with our money. So part of what I've tried to do and what we're trying to do with the Motley Fool is reconnect people with their money and what investing really means. So when you start asking me questions like, is there short-term investing, David? Or what about these people who say they're stockholders, take a position in order to exert power in the boardroom? Yeah, that doesn't feel like investing to me. And I think that rule breaker investing, which is obviously my theme, the title of my book and what I stand for, matters deeply to me. And it's all about that mental picture of keeping that jersey on, loving the jersey, what that stands for, what it means to you, and staying by your man. So I would say again, I don't spend a lot. Ron Shaich, fellow traveler in our movement, founder of Panera, somebody you guys know much better than I do, but I'll always remember a talk that Ron gave at the Conscious Capitalism Summit where he said, you can look at the stakeholders that we try to support as conscious capitalists. Of course, your customers, otherwise why do you exist? Of course, your employees, because they're the ones who breathe life and energy into our institutions every day. Of course, your community or the environment, depending on what type of business you have, they are stakeholders too. And oh, by the way, Ron pointed out, I'm not sure shareholders are actually stakeholders in a lot of contexts because they're the ones who aren't playing a long game. They're not actually truly invested if they're just taking a quick power position as a private equity or aggressive investor attempting to change management of the culture of companies. So yeah, they may sound like shareholders or stockholders, as you said, but they don't act like investors. And I'm obviously standing for and by investors and wanting to be invested in companies that can't be tackled or taken down by that kind of short-term incentive that looks like investing, but clearly is not.
So, David, related to that, so you've said that most of what matters in business doesn't show up on financial statements, and they're the intangibles. And so, how do you first of all identify those, and then how do you actually track those? Because it's hard to get information on some of those things. Like, how do you measure the culture, or the strength of purpose, or the quality of leadership? Some of it is a judgmental call, but what is your, to the degree it's possible, analytical process in looking at those intangibles, and how can we then use those as flipping it around as a leader? How can I make sure that I'm cultivating those intangibles?
Thank you, Raj. One of my favorite questions. So I'm gonna speak out both sides of my mouth briefly. So I'm gonna give a very strong statement in support of what you just said, and then I'm gonna say I don't know the answer to your question in the next breath. So let me lead off by saying that I have realized that one of the best indicators as a buy signal that I can get for an investment, which you now know means I'm going to be in it for, in my case, at least 3 years. So when I buy a stock, I do not sell for at least 3 years, preferably 3 decades. But one of those things that I'm looking for is who's leading the company. That matters deeply to me. Keep in mind, as we buy stock, we're competing against a lot of people who are just looking at charts. They're looking at patterns and graphs, or the vast majority of the volume on the stock market every day is algorithmic, computer-driven trading, often inside of a second. If you actually even care who the CEO is, if you're even a self-directed investor, you had the guts to buy a stock directly in a culture that has raised you to think you're a crazy man for doing so. No one should buy individual stocks directly. If you have the guts to do that and then care about who the CEO is, you are now in rarefied air, my friends. There are not many people doing what you're doing, and that is our great advantage. So that, Raj, is my first strong answer. Who's running the company? There is no expression of that numerically on the financial statements. There's no income statement line, no balance sheet for Jeff Bezos or Elon Musk or their opposites, value destroyers. There is no number for the things that matter most, and we can lead off with who's running the thing. There are a few others I could bore you with, so I won't. I'll just throw out another quick example, but there are more. How about the brand of the company, which is deeply important for buyers usually, and so valuable to create. We've tried, I think conscious capitalism is a brand. Many of our fellow travelers who show up at CEO summits, from Patagonia to Panera, we've mentioned so many of these companies over time that have beloved brands, not beloved just by the employees, but by customers. And there is no number on the financial statements for brand. You won't see it there on the income statement, the balance sheet, or the statement of cash flows. So we've just talked about two of the most important things that actually create value. And most of Wall Street and most people who are valuing stocks are doing them as multiples off of cash flow or earnings. That's how they're valuing stocks. And when you think about it, those are outputs. They're not inputs. Inputs are things like who's running the company, what's the culture, can these people innovate their way out of a box, and by the way, do they have a brand? So Raj, I've realized that calling stocks overvalued is actually a powerful buy signal, and that's one of the most rule-breakery insights I can share in our conversation. And yet, you asked me an even more complex question, Raj, which I'm going to duck. You asked, how do you express those things numerically if you think, David, and we think, gentlemen, that those are important? And my answer is, it's for the next generation to decide.
So I want to double down on one of the things that we're bringing back a little more strongly into the conscious capitalism story is, you've touched on 4 of our principles, right, or our tenets, right? We talked about purpose. We talked about stakeholders. We've talked about culture. We've talked about leadership. And you've got to have a good business model. And you've got to have an innovative agile business model and a pretty decent strategy. Those are sort of table stakes. We assume that you've got that. And then the plus is these other things, which, as you rightly point out, are intangibles. I was reminded we just had our Cincinnati event, and we went and had the wonderful opportunity to go to Henny afterwards. And Rob Connolly and the team there were great. Henny, probably never heard of unless you listened to Rob on our podcast, but they're one of the largest producers of industrial kitchen equipment in the US. Chick-fil-A, McDonald's, Kentucky Fried Chicken are run on this guy's fryers. They have 80% market share. So we're having a discussion. COVID comes along. They decide not to lay anybody off for as long as they possibly can. They understand the cash flow implications. We're going to try to not lay people off, but we're going to be really transparent. Here's the cash position. Here's what we can do. Down to 2 days of work a week, right? Because 80% of their business has gone away. They've got 2 days of production. Give people the other time to sort of work on the business, get better, look at things we can do better, and all these things. COVID ends. What happens? Restaurant industry bounces back, huge, big blow up, and they double the size of the business over the next 2 to 3 years. And the key thing, their competitors were taking 52 weeks to complete an order, and they were doing it in 6 weeks. Why? Because they held on to their people. They built muscle while they were down. The competitors laid everybody off, had to bring them back on, train them, and so they ate everybody's lunch for the next 2 to 3 years. It was like a hot knife through butter. The funny thing is, how do you go back in April of 2020 and say, where's that on the spreadsheet? Where's the fact that we're going to nurture a culture of growth? We're going to invest in our people. We're going to build the core muscle of the business so that when we do bounce back, we will knock the crap out of our competition. And I thought that was fascinating discussion. Like, it's just not on anywhere on your spreadsheet in April of 2020. And I think that really underlies this whole point of the intangibles. How do you address that, David, more systematically? Because I think that's one of the problems that we keep getting challenged on. I hear it all the time. Make the case for conscious capitalism. And as you said, the next generation will judge some of these companies. But how do you make the case for conscious capitalism, given this discussion about intangibles?
Well, chapter 4 of Rule Breaker Investing, habit number 4, getting away from stocks now and back to our own personal habits, is follow the tenets of conscious capitalism. So the way that I make the case is right there in the book, speaking directly, not in this case to entrepreneurs, although I think in a lot of ways, as an entrepreneur, I'm writing my book for entrepreneurs. But really, it's just for any individual investor. Again, somebody who has the guts to actually buy a stock directly. What a crazy notion that you would take the risk to do that. And sarcasm aside, I truly, having watched now, along with you guys, companies like Henny and so many companies that I admire flourish and beat their competition. It's fairly obvious to me that these are increasingly table stakes. If you're not managing for all your stakeholders, if you don't have a higher purpose, if culture doesn't mean as much as we've just tried to underline in our conversation, and if leadership isn't a servant style leadership, you're unlikely to compete well against companies that have those 4 things. And I guess part of what I can bring is the perspective as a lifetime stock picker of this is what I've been picking for. Even before I ever met Timothy and Raj and John Mackey and all these people that I admire so deeply, which was something like 18 years ago now. The previous 18 years, I was intuitively doing a lot of these things. I didn't always have the language for it. And I needed time to pass in order to observe empirically who's winning and who's losing. Not the headlines of the day, not that stock market return for 1 year, but who actually is making me serious money over serious amounts of time. And I'm persuaded now that these things work. So whenever I go out and give a short stump speech about conscious capitalism, I say things like, and you all know this because I've learned it from you, who do the brightest young people want to work for today? What kinds of companies and organizations, for profit and not for profit? You are going to have access to the best talent if you actually recognize the things that we're talking about. And if you don't, if you're blind to them or you outright reject them, you're not going to get those people working for you. And I know the value of great employees. So it starts there for me. But yeah, right there in an investing book, I say as a habit, not something you're seeking out in companies, but for you as a person, follow the 4 tenets of conscious capitalism. So that's the little blow for freedom I've tried to strike on our behalf.
One of the other things that we're spending a lot of time talking about, David, is that we're living in a period of really radical uncertainty. Now, I know we want to be rational optimists, but from a geopolitical point of view, huge uncertainty going on in the marketplace. Not just the stock market, but just as a business. And it's not just AI. It's also, we have quantum computing and blockchain and nanotechnology and robotics and, material science and life science and biotech. All of these things are at a stage where we're at a tipping point for major breakthroughs, and they interplay among each other to actually accelerate that. So we're going to see a lot of business model disruption. So, geopolitical uncertainty, business model disruption, we argue that the organizations that are going to win are going to be those that can be innovative, agile, and regenerative. And so we look at that and say, well, what drives that? Well, how about high degrees of trust, high degrees of worker engagement, high degrees of psychological safety? And those organizations that can create these kind of cultures with these intangible assets are going to be even more valuable because they can pivot, they can surf, they can much faster than their competitors. And I'm wondering how, if at all, that plays into how you're looking out in the future and sort of saying, with all this radical uncertainty, I really need to double down on my philosophy, or this is even more important than ever. How do you translate that for us into how you view the market?
So when you say radical uncertainty, business model disruption, new technologies, I'm like, oh, so it sounds like there are going to be more rule breakers showing up. Great. Because that's how I invest. And so what you're telling me is a whole bunch of new draft picks are about to show up in a very disruptive format where there are going to be more great players than were ever available over the last 10 years over the next 10. That sounds exciting to me. And so while I guess radical uncertainty, because humans don't like change and we particularly fear loss in a way that's hardwired into us biologically, which I talk about in Rule Breaker Investing, because the fear of loss is 3 times the joy of gain, which is profoundly important and lab-tested behavioral economics. This is now a human truth. And so I want everyone to know the goodness that's going to come of radical uncertainty and the opportunities that show up forthwith. So, of course, humans fearing risk, not liking uncertainty. Radical sounds like, oh, we're lighting a fire under it and heating it up even. But I'm actually here reminding us, how many things are you appreciative about the internet today that it's brought to your life, from e-commerce to social connection to having this video conversation pretty much for free over broadband in a way that we could only dream about 30 years ago, let alone 100 years ago. So yeah, these things are going to keep proliferating. The good guys outnumber the bad. Let's invest in the radical uncertainty that shows up. Let's go now, if I may, to the first and most important portfolio principle of the Rule Breaker portfolio. And that is a phrase that might be on my gravestone. I'm not going to say because my wills and estates are private. And, if you die before me, you'll never see my gravestone. And if you come after me, you can let the world know if I had it there or not. But portfolio principle number 1 is make your portfolio reflect your best vision for our future. That is portfolio principle number 1, which is, of course, deeply aligned with conscious capitalism, an organization that you both have helped found and have added so much value to my own understanding in the world's when we really look at what matters. And you realize our money should be a natural expression of ourselves. We're all seeing something different. Your vision for our future, not mine. We're all seeing different parts of the elephant. And I believe that your dollars, if you're truly conscious, they probably aren't indexed. I mean, if you really are serious about peeling back another layer and being conscious with your investing, I believe that you should be expressed in a way that any stock or fund you know well, and you believe as it flourishes over the next 10 years, the world will be a better place. And you will, by the way, do mathematically better with your investing if you're invested that way than if you're just giving it over to your money guy or saying, I don't even know, we're just indexing everything. I'll just buy everything, which, by the way, means you just bought all the bad companies and all the mediocre also rans when you could have just gone for the first rate, not settled for the 10th rate, which is what everybody's doing when they index every day. So yeah, there is a little bit of conscious love for portfolio construction and specifically make your portfolio reflect your best vision for our future.
David, you talk about intellectual curiosity as an important habit, and we can see it in you, right? I mean, just the way the things that you quote and the broad range of your knowledge. So how do you cultivate that curiosity, and how can organizations incorporate that quality into their cultures and their people?
Well, thank you, Raj. I think, first of all, it starts with a sense of agency, which not everybody possesses. I think recent studies say, did you guys see the same headlines? I admit I didn't read the article, I just saw the headlines, but something like 20% of Americans do not have an internal dialogue going on in their heads, which,
Really?
if that's true, is just crazy to me, because to me, we all have internal dialogues going on, but apparently not everybody does. But I would say,
Constantly.
first of all, having a strong sense of agency, which, by the way, I was kind of born with, and I come from a wonderful family that gave me many things that other people can't take for granted. So, but I'm always looking for people who think what you do and say matters, you are accountable for that, and you will be stronger and better when you adopt that and take up that mantle. So I would say, Raj, intellectual curiosity starts with the decision to care and a belief that you can self-improve in that classic American, maybe 19th century sense that, roll up your sleeves and you can get better every day. And I do truly believe that. And I think people who do are generally stronger than people who do not believe that. So I would start there. Then I have to throw something in about games, because while you can't really see me on our Riverside background and what's in my room, and if I spin my monitor a little bit, you can kind of see a blurred version, but those are all board games. I have hundreds and hundreds of board games in the room that I'm speaking to you from, because I absolutely love games, which we're only getting to near the end of our conversation, and I will not geek out any further other than to say I love games, and I believe that games, in a way, create a temporary state where you can, with friends, you can pursue a goal with agency, and you can win and lose and learn something about yourself, the others around the table, and also the world through the beauty of a good strategy game. And so to me, that always lights my intellectual curiosity and fire. That rewards me for leaning in and caring about things that arguably don't really matter. The final score and how many victory points you had in that board game. And yet I actually think they do matter more than most of us understand. I believe that games are a form of art that is actually deeper and more beautiful, radical moment coming here, than paintings, sculpture. I would even add in drama, one of my favorite forms of art. Games include all of these things with their components, but they have rule sets and they create temporary forms of agency. And the philosopher T. Nguyen, who operates out of the University of Utah, speaks beautifully about this. So I actually believe games are the highest form of art, even though it sounds like Dungeons and Dragons, polyhedral dice, and a bunch of geeks buying games like me on Amazon. Actually, I think looking backwards from the future, we will understand that games and gamification were such powerful forces for good, providing people with agency, understanding, rewarding intellectual curiosity. I'm getting off my little stump, and there's my speech about the beauty and importance of games. And I grew up with games. I said earlier, I grew up with optimism hardwired into me. I also grew up with an absolute infatuation with games.
I've had the pleasure of actually being on a trip with David and his wife and others, and playing some games I had never heard of, and just having a wonderful time. So yeah, you've really opened my eyes to that. It's not a waste of time. It's actually a very delightful way to grow and learn.
Well, I love it. And David, we've really appreciated having you here today, and all this wisdom, curiosity, and excitement. I started off before we started to said, we're going to have one of the good guys from Wall Street. But you know what? It turns out he's just a good guy, and he's not on Wall Street. He's in D.C. And that's probably what kept him being a good guy. So, David, thank you for being the good guy in the investment world, and for the gift that you brought to people about how to think about something that's really an important part of our lives. So thank you so much for that.
Before we say goodbye, David, we do a quick rapid fire round of quick questions and quick answers, okay?
Wait, I have to give quick answers? Raj, is this a game?
What is the first stock you ever bought?
First stock that I ever bought was Leaseway Transportation. Leaseway Transportation is a trucking company based in Cleveland, Ohio.
If you had to name a favorite board game out of the hundreds that you have, which one would that be?
Because, and I'm going to still keep this to roughly 30 seconds, but I'm going to give two. And that's because for most people, they don't want to geek out to the level I will with board games that take 3 hours and take 1 hour to teach. And that, by the way, is Terraforming Mars, which is probably my favorite board game today. It's been out for about 10 years. It's all about terraforming Mars. It's an amazing economic simulation that takes an hour to learn, 3 hours to play, and I've played it dozens and dozens of times. It replays differently every time. Genius game. And for most of the rest of us who just want a game that takes 5 minutes to learn and we can play with our friends and family, it's a word game and it's a cooperative game. We're working together. So Clover, you can buy it on Amazon. I'm not going to explain the rules because I only had 30 seconds, but it is such a fun, accessible 20-minute experience with friends and family.
Okay, we need to get the exact spelling of those.
Yeah, So Clover is a pun on so clever. But it's a green 4-leaf clover, and so you'll see it on Amazon. But Terraforming Mars, I think you know how to. Well, you don't have to even spell terraforming. You can just Google it these days. But that.
What is the book that you have gifted most often to others? Other than your own.
I would not answer my own, but thank you. I probably would say. What's funny is I don't give books often as gifts, but what I do is I do have authors on my podcast over time, sharing out books that I really love. And I would say probably the one that I may have turned the most people on to is Positive Intelligence by Shirzad Chamine. I completely recommend this book to all human beings. Shirzad says, we've all heard of IQ, supposedly your brain intelligence. EQ, you need to have that in the corporate room today if you want to be a leader. Emotional intelligence. He says, what about PQ? Positive intelligence, which he defines as the ability to move on from negative things and not be preoccupied with them. He said, basically, the bad things in life are like an open flame. And when you hold your hand over an open flame, what is your instinct? The answer is to remove it from the open flame, which is the correct answer to the question. And he said, it's amazing how many people don't emotionally or psychologically, they don't develop the ability to pull their hand back. That's positive intelligence. There's a lot more to it. It's also a fast read. But Shirzad Chamine and his work at Stanford, I think he's brilliant, and I love that work. Positive intelligence.
Wonderful. And what's your favorite line from Shakespeare?
A fool, I see a fool in the forest, a motley fool. It's kind of a nondescript line, arguably. It's just sort of a repetitive of our corporate name, but it's in Act 2, Scene 7 of As You Like It, my favorite of Shakespeare's plays. I would say the greatest scene of all of literature, but at least in Shakespearean context, Act 2, Scene 7 of As You Like It is a celebration of fools and foolishness.
Thank you, the ever effervescent and wise David Gardner. Thank you, David, so much for all of your...
This was an absolute delight, Raj and Timothy. Thank you very much for the invitation, and fool on.
Yes. Foolishly having you on was a brilliant decision. So there we go. Be a fool, have more fun. And thank you, our listeners, for joining us this week. And on whatever channel you're listening, if you feel so moved, please hit the subscription button. And for many of you who want to leave us feedback, please go over to Apple and iTunes, give us a rating and leave us some info there about how you felt about this. We always love the feedback. And of course, a big thank you to Rainbow Productions for helping us produce this, and to Conscious Capitalism, who sponsors this and makes sure that we're able to provide this to you. Thank you all, and we'll see you next week.